Have you ever had $100 and wondered just how do I turn this into 1,000, 10,000, or even $100,000 before reality kicked in and you went and bought that Netflix subscription? Well, I'm here to tell you it's possible. And in this video, I'll be breaking down 7 methods that are very effective and common in their own ways. As the video progresses, so will the risk. But as they say, the higher the risk, the higher the reward. I'm a businessman, not a financial advisor, so doing your own research is highly recommended. Index funds are investments in index. What the hell's an index? An index is a tool that measures the market, like the S&P 500, the NASDAQ, or the Dow Jones. They usually track the top companies in the United States, so when they go up, the economy goes up. When they go down, it's the president's call. If you invest $100 a month in an index fund, like Vanguard's S&P 500 stock, starting today, in 5 years, you'd have a balance of $8,000. In 10 years, you'd have a balance of $20,000. In 20 years, you'd have a balance of $72,000, and so on and so forth. For comparison, this is how much you would have if you left your money in your savings account. On this list, this is the safest method to pursue due to its minimal risk and guaranteed reward, but it usually takes great patience and discipline to leave and keep adding on to the money in your account balance. This is what separates the 99% and the 1%. The United States government declared war on the gold standard when they took the dollar off the gold standard completely in 1971. The US has since gotten its ass kicked severely because gold has since become nearly 6,000% more expensive today against the US dollar due to the dollar's depreciation, which means a decrement in value, and gold has almost always outpaced the S&P 500. If you invest $100 a month in gold for the next 5 years, it'd be worth $9,000. After 10 years, your balance would be $25,000. After 20 years, it'd be worth $105,000. This is only possible if gold keeps growing at a rate of 13% per year, which it has for the past 10 years. You can see how it beats the S&P 500's index funds that we just talked about in our last method. However, I'm placing gold at a slightly higher risk level due to the unpredictability of the US government, especially with the new administration coming in. I can easily imagine the dollar regaining its strength, which would reduce the value of gold against the US dollar. A real estate investment trust is a company that helps you buy partial ownership in a home, office building, shopping mall, hotel, etc., etc. The way this works is you invest in a trust like you would a stock. You then get paid dividends from that investment, which is a portion of the revenue that the building you invested in brought in, and you get allocated, decided based on how many shares you bought. Different firms offer different rates, but usually you get paid the same way. You buy shares in a trust and get paid dividends based on your share in that firm. I know you like numbers, but this one is incredibly hard to calculate as there are too many firms with different variables to take into consideration, and I can't say one firm is better than another. This method works really well because it's usually only offered by companies who are already profitable, meaning they're constantly making money because that's the only way they can afford these programs, and this decreases your chances of losing your money. However, the housing market is very unpredictable, therefore I'm placing this at a higher risk level than the previous two. When you think about what it means to invest, there's no doubt in my mind that this is what comes to mind. While all these methods I'm going through are going to require a video of their own, breaking them down and explaining them, stock trading needs its own series. In a nutshell, the way this works is, on the surface, you buy shares of the company at a certain price, and when the value of that stock increases or decreases, so does the value of your investment, and you can sell it at any time. To put this into perspective, if you bought $100 worth of shares in Tesla 5 years ago in 2019, it would be worth $1,800 today. And if you invested $100 every single month for the past 5 years in that same stock, it would probably be close to $20,000 to $30,000, but I'm not too sure. This is by far one of the most popular millionaire creators in America. However, while investing in big companies is often the safest thing to do, with individual stocks, people want to make a killing and change their lives and make a quick buck. Most people who lose their money try to beat the market by always aiming to buy when low and sell when high. And this is not a very good idea because it never works. And as the greatest investors all say, nobody, and I mean nobody, can predict the market. Normally, investing in large Fortune 500 companies is safe unless a very rare occurrence happens like a fraudulent discovery about the business or a pandemic. The stock value of these corporations often grow in the long run, but once you take your eyes off the big companies and search for quicker, bigger profits, the risk level increases exponentially. Where do I even begin with this one? Cryptocurrency is entering its golden era, as you all may be seeing. If I'm right, you're welcome. If I'm wrong, that's a joke. With Bitcoin finally breaching $100,000, it sent shockwaves across the finance world and set precedents for future cryptocurrencies. At the moment, Bitcoin's market cap alone is higher than the top 3 banks in America combined. Let that sink in. I'm sure you all know how crypto works, and if you want me to make a separate video on it, let me know down below. But crypto is even more unpredictable than everything we've talked about thus far, and for good reasons, which I won't get into. Crypto is so popular today because it's so lucrative, and especially with its meme coins. For example, if you invested $100 into Dogecoin 5 years ago, it'd be worth $12,000 today. And if you invested $100 every single month for the last 5 years in Dogecoin, it'd be worth well near $100,000. The reason why crypto is incredibly risky though is because there are little to no regulations on it, which has given scammers the holy grail method of taking your money. And on top of that, crypto itself is unstable. Bitcoin, the mother of all crypto, had plummeted in value, and it was all because of one tweet, and it sent the crypto market into a spiral. And during the pandemic, the crypto market cap had shrunk to just over $200 billion in total around June of 2020. Crypto is like stocks. If you know what you're doing, you can definitely make money, but most people hop on the hype train and buy top to a token. When you have a little extra money, there's nothing in the world that can bring a smile on your face like the thought of what you're gonna buy with your lottery money if you win. This method is for people who want to lose their money because they understand that they won't win checks, but just maybe fate has their eye on them today, and this $100 would change their lives. You have a higher chance of getting hit by lightning than you do of winning the lottery. And for reference, in 2023, only 70 recorded cases of lightning injuries and casualties were reported. Let that sink in. The lottery is often played for the fun of it, with the expectations of victory being very minimal, but people love to contribute to the prize money because they're good people. However, the same can't be said about our final level. The casino is the same as the lottery, but except the people are not very nice. Taking your $100 to the casino is the same as buying those lottery tickets, but except this time, winning and the thrill of potentially losing all your money is what drives you. This changes everything. When you go to the casino, it's to give your money to the casino owner, and it's your way of thanking them for letting you stay a bit. Some people come genuinely thinking they've studied the system, but that's just not the case. And when they lose, it's because the system is rigged against them, and the casino staff is full of thieves who stole your money. I strongly recommend against going to the casino, but there is still a chance. It's not zero, but it exists.